SOFI update on the 15th. It's been a while since I did an update, so I thought I'd update you guys. I'm still seeing the same pattern that I've been talking about in the last videos. I still see us in a B, C, D, and then a potential E wave higher. It doesn't necessarily mean that it's going to be bearish after we get down to the E wave. It could still be bullish. Like you could see something like this, A, B, C, D, E. Kind of like this, and then you pull back a little bit, and then it goes higher. So it goes like that, and then it goes higher, like this. So it doesn't necessarily mean that we're going to go down after this is finished, but that's the most likely pattern based on the chart right now I see. And then the price action over the last couple of days is not impulsive. If it was impulsive, we would have wanted to see a break of this parallel line, and also we would want to see over the 1.61 fib for a third wave, so something like around 705 or so. And so we didn't get that price action, and we actually sold off into the close. A great day though overall, going against the overall market. We were up and they were down. It was down 1%, so a great day overall, but still a corrective move. It's not a bad thing though, because based on this move, I say this bottom is pretty much in. I don't think there's a chance, unless there's a catastrophic sell-off in the overall market. This bottom right here is in, and if you didn't buy back here, you're probably not going to get a chance to get in lower than that, and you might not even see below 6 again. So that's just my thoughts right now. And if you zoom in here on the 5-minute time frame, I've gone through this. This is definitely an ABC move. It finished right here at 665, and we pulled back to 641 in the end of the day. And so the most likely scenario, I think, is ABCA, and I think there's a good chance we do pull back here, but I think it's going to be around the 0.38 or 0.5 fib, which is anywhere from like 624 to 611 would be my targets. So I'll put that right there for a B wave. Of course, we could go all the way back down to the very bottom of the range, but I think it's not very likely based on the price action. We're strong today and the market's weak, but when we're that strong, like if the market was up today, we might have hit $7. So I'm expecting the market to be weak over the next week going into Powell, and then possibly hitting like 380, maybe even going all the way down to 365. So I'm not expecting to get a lot of help in the overall market over the next week or so. But today's price action in the overall market is making me think that they're going to try to, there's a potential for them to try to finish this move going into Powell around like 380. It maybe hit the 1.23 fib of this move right here, which is around 380. And so if that's the case, it's only another 3% off. We could pull back here to the low 6s, or maybe like 610 to 620 as a B wave, and then get a bounce to about 730 or 740 for the C wave. And then that could be considered the overall A wave. So we'd have A, and then another pullback, of course. We have ABC, and then we pull back to like 669 or 646, somewhere in there. So I'll put this right here. And then of course we would get one more move higher for the overall C wave, probably sometime going into earnings. The 1.61 fib of this is like 840, but I still think we hit the top of this parallel line, because last time earnings we hit the parallel line perfectly, and so I think there's a good chance we hit it again. It seems like a pretty good structure to use to measure where we're going to go. So $9 is my target still. And I think this structure is pretty a good way of looking at it. So A, B, C, A, B, and then overall C wave and that would be the overall E wave completed up there. And like I said before, this can be interpreted as very bearish. It could also go like this, but I don't think that's going to happen. I think something like this would be more likely. Come up here, retrace a little bit, and then go higher. And yeah, kind of calling from there obviously is kind of just guessing, but and I'm guessing on this too, but that is a very likely pattern. I think it could play out over the next month and a half. So yeah, the ending diagonal or the beginning diagonal is less likely now because we're putting in a corrective move over the last 8 days, and that's typically not how you start a beginning diagonal, so I'm leaving that one out for now. So yeah, that's just what I see right now. Just staying in this channel, ABCDE, and very bullish from here. SOFI is very bullish compared to the overall market, and I think the dollar should start coming down a little bit, and I don't know how much more SPY has to go down. I think it could go down to 365 and double bottom. I don't see it being the catastrophic sell-off that everyone's been calling for lately. So I think that's pretty good for us if they can finish it maybe by the end of September, maybe early October, and then we can run into earnings, hopefully hit like $9 going into earnings. So yeah, that's just what I see right now. We finished this ABC move today, in my opinion. If I'm wrong, then I would look for 705 for a third wave, but pretty sure this is just an ABC pattern. So look for a little bit of a pullback and then a move higher for the C wave whenever we bottom here. So that's it for today. I'll leave you guys a update probably early next week, I would think, unless there's something that's crazy that happens tomorrow. I'll do another update on Monday or Tuesday and give you an update where we're at and see if we're in the same pattern or not. But until then, leave me a comment and like and subscribe and let me know how you're playing this right now. Are you selling covered calls right now? Are you being that daring? Or are you just letting your shares ride? Are you buying options? Like, what are you doing? Because the play the last couple of months has been selling covered calls, making profit 100% of the time pretty much. But now you got to be very careful. We got upgrades from Bank of America. We got options coming up. We got the student loans going to be ending here in January. So a lot of catalysts coming up. So you got to be careful with the covered calls and make sure you're hedged. So you're probably going to be net long. You don't want to be selling all your shares to cover calls and actually being pretty neutral or even like bearish. So that's all I got for now. Let me know what you think in the comments, and I'll see you next week.